Hello everybody, good morning, good afternoon, good evening, wherever you are in the world. I'm just going to do a real quick update right here because time is of the essence. I'm going to be taking a look at the S&P 500 only. It's going to be a real quick video. I'm going to be discussing a video that I did in, I did a video previously in great detail, and so if you want to go and find that video, look for my video I did on finding significant tops in the S&P 500. What we're seeing right now is we're seeing some interesting scenarios here. What I'm looking at is basically we've got a series of higher highs that are being created, both on a higher time frame level or really a longer time horizon, where we've got a top right here that occurred roughly back in March, and then we have our new local top that just created about 2 weeks ago. And if you take a look at the VIX, which is what we've got down here, we've got basically signs we've got a lower high on the pullbacks. But what's more important is this shorter time horizon, starting from back here on May 16th to have a high, another high before another pause here on June 18th. And then we have, of course, this high right here that occurred right around July 15th. Now, if you take a look at the VIX on here, you have on those highs, you have a series of higher lows. Now, it's not as pronounced, but if we zoom in, you'll notice that the trend is up on these. So on every higher high that we had, the VIX is creating divergence. Okay, so I look at this from a divergence standpoint, and when you're looking at it, it's kind of the opposite from what we typically expect when we're taking a look at divergence, where we've got basically higher highs on the price and we have higher lows on the VIX, and that is exactly what has been setting up here. But now that's only one recipe, right? So you can have higher highs on price and higher lows on VIX, and that is a sign that things are probably going to pull back, but trying to catch that's not always the easiest thing. So what you also need to do is you need to take a look over here at the 250 period moving average on the 30-minute time frame on the S&P 500. So what you can see here is we clearly broke below that. We clearly broke below that level, and we are kind of trying to get right back up into it. But here's the key. Right, you have to take a look at both of these, and what we can see on the daily time frame, you've got divergence on VIX when we had that high. We finally did break down below that 250 period moving average, and we're going back to retest it. Now, more often than not, now this doesn't work 100% of the time, nothing does work 100% of the time, but more often than not, let me go ahead and just go in on this, when you do a retest of this, you're going to start to see a negative reaction off of it. So, and I say that, this is time is of the essence. It is 10:38 a.m. here on 7/31/2024. This is a high probability area for rejection. Now, that doesn't mean it can't go above it, just like it did right here. But, we go back up here after a significant gap down, and, on that retest, typically it means that we're going to see a more significant pullback. Now, if we go into what I'm expecting here on the S&P 500, let me go down to maybe a 2-hour time frame. We've got a nice green day here, and I do believe it is possible for us to come up here to this 55.60 level. Very, very possible. What would that be? Well, that would be a nice gap fill. Like if we go ahead and just mark this out, a gap fill would be roughly, right here in this area. And for us to extend a little beyond that would make a whole lot of sense. Is it going to happen today? I mean, it does kind of look like we're going to get there. We have FOMC coming up here in just a couple hours, and we do have signs of strength here, but I think this is sort of a relief rally. If we get back up above 55.62, then I would say that it's possible that this scenario here, we're looking right here. This level is at about 55.50. I was talking about 55.62. That's going to be about right here. If we start to close above this level right here, then we can start talking about this idea being invalidated. But we've got that gap fill that's right here, basically right on the other side of this 250 moving average on the 30-minute. And that's my indicator that we could start to see a more significant decline. And what I'm really looking for, I'm not looking for a crash, guys. I'm not looking for a crash. I'm looking for a move down, potentially to 52 to maybe 5,300. Is it going to go much lower than that? It's possible, but that 5,200 level is more than likely where I think things will go, and I do think it'll take time. It may take the entire month of August, and that's kind of what my projection here is showing, that the entire month of August potentially could be bearish. And we're at a level right now where we're just tagging the 50% internal retracement here. And if we get back up here to this 55.62 level, that would be the area that I would be looking to get into more aggressive shorts for the end of August, maybe even the beginning of September. Now, typically September is the bearish month, but maybe it's going to be August. We have the end of the month coming in today. We also have, again, I already mentioned FOMC is coming up here in just a couple hours. So there's, a couple things that's a recipe for the condition that we will be seeing another decline in the S&P 500, right? Today was a great day. We made great money on NVIDIA and some other things as well. And we closed out some equity positions. And I'll be looking to hold a lot of that cash on the sidelines in the event that this does happen. I'll be taking some conservative short positions in the event that we do see this decline here. From a time perspective, this decline may happen a little bit quicker. It may come into the middle of August, but mid to end of August, if this does work out the way that I think it might. Again, we're going to be watching this as well, watching this level 55.82. If you take a look at this from a risk to reward perspective, if you throw a trade on this, so I'll just do this really quick. So let's say we do it right here at this gap fill area, right? We're talking about a stop loss being somewhere right here around 55.88, but look at the return on that. If we go down to even 52.25, you're talking a 5.89% drop on a 0.63% risk. So if you got into, let's say, SPXU, just a simple 3x leveraged short position on the S&P, that's basically a 1.8, 1.9% stop loss for almost an 18% gain. That is a trade that I would be willing to take. So that's what I'm going to be looking to do. We're going to wait and see what happens at FOMC. I'll be setting some bids here, and again, we're looking at SPXU, something along those lines, to get just a modest short position. But more importantly, we took a lot of profit over the last few days here on a lot of equity positions, so we'll be kind of keeping that money on the side. So if we get down here to this 5,200 level, that's when we can start looking at buying into more equities. We've been running the scanner over and over and over. It just hasn't been producing results that have been indicative of there being a good opportunity to buy. So I tend to believe that what we're really doing right now, we had this gap here, we didn't fill it, we're going back trying to fill this gap. I don't believe this gap is going to fill in the next few days because, again, we've got this gap fill. I think if we get it, we're going to get that rejection, and we're going to come down here. We're going to fill this gap. We're going to fill this little minor gap here, and then we'll come back down and retest this strong support that we had back on May 31st. What happens after that, we'll just have to wait and see. But that's currently what my primary projection is, at least for the month of August. Now, how does that translate into Bitcoin? I'm not going to get into that right now, but typically there is a little bit of correlation. Watch the dollar index. If the dollar index starts to go up, you can tell immediately that that means that's not great for Bitcoin in the short term. If the dollar index starts to go down, that's great for Bitcoin. That's going to make Bitcoin's price drive up even higher. All right, guys, that's all I've got for you right now. I wanted to keep it real short and sweet. If this video helped you in any way, shape, or form, you know the deal. Like, subscribe, and this is a members-only video, but feel free to go ahead and share it with your friends if you'd like. We'd love to have them on the Discord as well. And last but not least, wherever you are in the world, I hope you're having a good day, good night, and a great evening. Take care, everyone.